Because a lot of people we do find are quite novice.
Please do not put any cash in here that you want to touch in the next 5 years.
I was like, what? The money doubled in 4 years. Don't even look at the returns before a year.
The asset class will reward you for patience.
You just need to die first.
And they are risks, and correct me if I'm wrong, they are risks that Halal Stocks does not remove.
Earn the right to reward by accepting risk.
Do you know what this is going to become? This is going to be a huge advert for investing into crypto. Without great risk, you can't make great money. They go, look, see, they told us.
Expect 50% of your money to disappear at some time in that journey and come back.
Assalamu alaikum, everyone. My name is Adil, one of the co-founders here at Nisba, and joined with my other co-founder,
Ahmed, assalamu alaikum.
And alhamdulillah, today we're joined by two very exciting guests. And I was thinking whether we even say where you're from, or we go the whole episode and see if anyone can guess. So maybe we'll go with that approach. We won't say where you're from.
Crikey.
But we've got two guests that have come a very long way, alhamdulillah, to join us on the podcast. And we're going to talk through their product. And we'll talk a little bit about investing and finance and a lot of other themes, inshallah. And hopefully it's beneficial for the audience. So without further ado, MK, if you'd like to introduce yourself.
Yeah, so Mohammed Kandil, Halal Stocks marketing guy, and very lucky to be a part of the team. Come from a background of, we're not mentioning where I'm from?
No, you can't, obviously.
So we're from sunny Sydney, Australia, and come from a background of charities and operations, and recently joined Halal Stocks on the journey. I'm feeling very blessed for it, alhamdulillah.
Rehan?
Assalamu alaikum wa rahmatullah. I'm Rehan Ahmed. I'm one of the founders of Halal Stocks, CEO here, and also from sunny Sydney, although it's very cold over there right now, and London is much, much warmer, alhamdulillah. So just enjoying the weather here, and great to be with the Nisba team.
Yeah, some people don't realize that you guys have like opposite weather to us. But how cold are we talking? Like when you say cold?
It's like 7 degrees at the moment, so it's a reasonably cold winter.
So like a UK spring.
Yeah,
It's as cold as it gets.
that's as cold as
It
it
doesn't
So the same temperature like in Scotland right now, or the north of England.
There are not many countries in the southern hemisphere. This is something that people don't realize. Like we're one of the few countries in the.
In my mind, it's you guys in South Africa.
Yeah,
South
I think
America?
that's pretty much it. Yeah.
South America,
Yeah,
no?
but they're not really important, are they?
Yeah. No, I don't know how much of South America is in the southern hemisphere. Just because it's called South America doesn't mean.
No, I'm sure some of them are.
Chile.
No, some of them
Chile.
are. Yeah, 100%.
Chile sounds
No, because
pretty
even like,
chilly,
yeah, in Brazil in like December, January is summer. They have their summer holiday.
Overlay map on the screen right now.
Yeah, yeah.
With the
Here's
equator.
the hemisphere.
Where's the equator? Alhamdulillah.
So as much as we would love to think that you guys are obviously here to see us, that's the primary reason. But is there a secondary reason why you're in London this week?
Yeah, we came for Muslim Tech Week. Alhamdulillah, it's been amazing at Muslim Tech Fest over the weekend. Yeah, we were here to launch actually in the UK, our first product out to the mass market. Alhamdulillah. So yeah, the UK is a very special spot for us from as a beachhead market. And I think we believe a lot in the UK consumer, and the fintech scene here is really, really strong. So yeah, I think this is where it's at.
Okay, we'll make sure all the targeting is not in Europe, just London and England.
Okay, imagine this now. There's someone's thinking about investing. They're a complete novice, and they see someone walking down the street with a T-shirt that says Halal Stocks on it, and they're thinking, "Oh, that sounds something like investing." Should they be considering your product, and how can you explain it in the easiest way for someone who's a bit of a novice? Because a lot of people we do find are quite novice when it comes to investing.
Right. So we did this at Muslim Tech Fest, and it was received really, really well, because people see Halal Stocks, and it's like, you know, it's one of those businesses where the name pretty much says it all. But then people come up like, okay, I get it. It's halal and it's stocks, but what do you guys do? Yeah. And so the way that I explain it is we guide people through, it's a platform that guides people through investing in halal stocks. So we do all the hard work of filtering the stocks that you should invest in on a Sharia compliance level as a beginning, and then ESG, which is the environmental, societal, and governance, and then BDS to make sure that these companies that you're investing in are not part of the boycott and divestment and sanctions list, and which means that they're not part of genocide, they're not part of weapons, and so on and so forth. The amazing thing about Halal Stocks outside of that is the performance of our track record so far. So we started in June 2020, and we've had remarkable returns in comparison to the market, I guess. And it's a lot easier for me as a marketing person when I'm explaining to somebody about halal stocks to show the track record, as opposed to say, hypothetically we're going to do really well in the future, but actually, the customers that have been with us since the beginning have seen really good returns from June 2020 until now.
All right. So you said that you kind of guide people through the halal investing journey almost, but you only focus on equity investments, so stocks, shares. And then let's say, I don't know how many shares or stocks there are in the world, maybe 10,000. Out of those 10,000 or 100,000, you guys pick all the ones which are Sharia compliant, all the ones which pass BDS sanctions, and then I come out with a list.
So this is a question for Han. He's the man that does our picks and is the man behind the algorithm. Perhaps this is origin story.
No, so I guess to directly answer the question, what we're trying to do is make sure that the Muslim investor has the best shot at generating great returns from the market, but also they're not compromising on any of the values that we hold as an ummah, especially in this day and age. We're in 2025 now. It's those are two compromises that we don't want for the ummah, whether it's the returns that they generate or whether it's the values that we uphold, right? And so that's what we're doing, is building model portfolios or turnkey solutions that allow us to publish what we're buying, what we're selling, how much, and when, so that if someone wanted to generate the same returns that we generate, they can do so. If someone wants to automate that process, we allow them to do so. And at the same time, we allow them to fulfill the Islamic obligations of that, which is, calculating the zakat for the companies that you own, or calculating the dividend purification that you as a Muslim should be doing based on, interest earned from bank accounts and things like that. So we kind of take from A to Z of halal investing, right, with regards to the stock market and gold. So in our portfolios, we don't just invest in stocks, but gold is a significant portion of the portfolio that we also include because it's a good diversifier.
So halal stocks, halal gold.
That's it.
That should be the new name.
Halal Bitcoin.
And from the kind of customers you've had already, are they mostly beginners? Do you think they're more experienced? What have you found?
Just really diverse spread. So some people, it's the first time that they've invested. It's the first time that they've bought a company share, for example. So we've got a whole bunch of people who are first timers, and that's really what we wanted to build for. And then we've got a whole bunch of people in the pilot program who were experienced investors, but they didn't want to be actively stock picking all the time because it requires a lot of time and research. And our job and what our algorithms do is help us find the best deals in the market, right, every single month. And so it helps even the active investors to be like, okay, well, here's some due diligence that's already been done, and these are attractive deals at this point in time. So I don't need to always be actively managing my portfolio. I can follow some of these if I want to. Yeah. It's a real mix, really diverse mix.
A lot of people who know a bit more about investing are very skeptical about people that try and provide great returns or say, we've managed to pick out stocks which have historically done well. However, on the flip side, a lot of people that don't know much about investing think that everyone needs to pick stocks. Do you think that everyone should be involved in active management in some way or form? Do you think it always has merit, or do you think that a mix of both? Or
yeah, it's a great question. I think if you don't have an edge in the markets, or active stock picking you can do if you want to do it as for fun, or just to try something out. I do encourage that. But if you're depending on that wealth to grow, then you need to have some kind of edge in the markets. And if you don't know if you have an edge, then you probably don't have an edge. And that means it's safer to be more of a passive investor markets, meaning you're choosing asset classes as opposed to choosing individual companies, because that can be very risky. Some companies are extremely speculative, and other companies are a lot safer. So I think it's horses for courses. It depends on where you are in that journey, and that's why I guess it's always more important to choose the right asset class. And when I say asset class, it means like the stock market as a whole, for example, right? Gold is its own asset class. Real estate is its own asset class. Venture capital is its own asset class. The decision to be in the right asset class, in the right weight, is more important than what you choose within the asset class itself, right? So a financial advisor or financial planner will help you decide what your right mix is. We come in when you know, or it's appropriate for a person to be exposed to the stock market, which is most of us in our pension funds are already exposed.
Yeah.
Like you don't have a choice. Someone's made that decision for you. The stock market, especially the U.S. markets, have been going up for the past 200 years. So as a trajectory, it is in the long term one of the one of the safest asset classes over a 20-year period, right? So if that's your time horizon, then stocks become safer than bonds, and even gold. So that's broad, what I'm talking about, the broad global market cap based weighted stock market.
So you're not saying that halal stocks is suitable for everyone. You're saying it's only suitable for people who have already ascertained, have already understood that stocks is right for them as part of their portfolio.
Yes.
And let's say someone has gained that knowledge. They've gained enough knowledge to understand that they need to have a diversified portfolio, and they've either spoken to a financial advisor or they've done so much research that they've decided that their ideal portfolio has 50% allocation to stocks. So that 50% allocation, that's when halal stocks comes in, because you're saying instead of going to the usual ETFs or the usual Sharia-compliant funds out there, if you're a Muslim,
Yeah.
you should potentially consider using halal stocks as an option.
Yes. So that is absolutely true. And it's also obviously we work with fund managers themselves to help allocate that. But at the end of the day, from a regulatory perspective, people have the right to invest in what they want, right? Or try and learn what they want. What we're trying to do is provide people some training wheels and some safer portfolios. If you want to try the stock market, right, then you could do worse than having a model portfolio that we've got, because we remove a lot of risk from the portfolios. We balance them out. We construct them in a way that helps to diversify. And so it can be a good starting point for someone who wants to try out the stock market but not be completely on their own. But, this is not financial advice. I think people need to know their risk appetite before they enter an asset class. The stock market itself, in general, is an asset class for people who are seeking more longer-term returns. So if you're going to put your money that you need into the stock market, and your time horizon is, I need this money in 6 months, it's probably not the right asset class for you. I need this money in a year, probably not the right asset class for you. But if I'm saving for something that might take me 5 years to save up for, then that's when it starts becoming an appropriate asset class, subject to your risk tolerance and how much volatility that you can withstand.
So that's one angle of it, I think. But there is another angle for people like myself who don't have a background in finance and don't have a background in, I think when I came across Halal Stocks first as a potential customer, it was the first time I even heard asset class. And so it's, I think one thing that you said that really strikes true for some of our customers that are more in my category of convenience investors, or people that want to offload that knowledge to somebody who knows how to do it better, right? So when in everyday life, we don't have to get to know the subject matter before we use somebody. We don't have to know anything about plumbing to hire a plumber, and so on and so forth. And so I think for some of our customers, it's kind of like, okay, you have a goal. Let's say, for example, some of our customers have saved up to go to Hajj using Halal Stocks portfolio. Some of them have saved up their house deposit using Halal Stocks portfolio. So the thing that's attractive to me about our product is that one, the returns are amazing, and two, the liquidity is really good. So, when you have money in a broker account, Halal Stocks doesn't take money from you to invest on your behalf. We have a strategy in the stock market that you're subscribed to, and you put it into your own broker account. And so you're able to liquidate that out of your broker account anytime you want. And that's, I think, for a lot of our customers, that's the attractive part about it. I have money, it's sitting in a bank account anyway, or I'm saving up towards something. I have a goal that I'm saving up to in a few years. Like Rehan said, it's not something that you're going to do in 6 months, because the stock market doesn't work that way. But if you are saving up for something in a few years, you park it in that portfolio, and you can liquidate it within 5 days, 5 to 10 business days, whatever it is, which is, and if you're talking about days in terms of liquidity, that's perfect. It's just pull out your money whenever you need it, kind of thing.
Yeah, I think that's really important. I think one of the types of risks that investors don't necessarily appreciate until it's too late is liquidity risk. So liquidity risk is how easily can I take all of my money out, or half of my money out, or 10% of my money out of this investment when I need it, as opposed to when the investment manager can actually do so. And so I think we're brought up in a way with this assumption that, let's say real estate, I'll give you an example. So real estate is considered a very safe asset class in general by people. Depending on which city you're in the world, in many cities it just goes up, right? There are cities where that's not the case. But if you're in one of those cities where real estate just goes up and has been for the last 30 years, like Sydney, where we're from, then you might be fooled into thinking that that's the right asset class for me. Even though, yes, it might be safe in the sense that it goes up over time and it doesn't crash as hard as other asset classes. When it comes time to actually taking your money out of real estate, sometimes you have to wait 6 months, sometimes you have to wait a year, and that's as good as not having the money at all, right? Because if you need it then for an emergency in your family or so on, it's like your portfolio is worth zero, right? And so I think liquidity risk is something that we need to appreciate. It's one of the positive qualities of the stock market is that when you need to break the bank or you need to take that money out, really no one can stop you. And that's a risk that people don't necessarily, appreciate as they should.
No, you're completely right. And actually, I was having this conversation with a friend just today. Basically, a friend asked to borrow some money, and I was like, no problem, of course. Because he was making the argument like, look, I've got a lot in Bitcoin, so I can sell it at any point. But the fundamental human doesn't like to sell their investment when it's not time to sell it. So I was like, yeah, that's great, obviously telling me that you've got this collateral, but the reality is that why have you not got enough money in your current account to just, tie you over whilst you're living? And that whole liquidity thing is key because, yeah, we might convince ourselves that we have the cash, but if it's not physically there and accessible, don't consider it as cash. Consider it as physically locked away and you can't access it. And the stock market is really nice for that in the sense that you can pull out your money and you can access it and use it. But there are so many risks in the stock market. So like if you have a complete novice, like let's say, MK, you said you're not, you're not financially perhaps quite up to speed.
Yeah.
How would you kind of communicate that to a new person? Like how do you communicate that level of risk? Do you think it's clear to them what they're actually doing?
So I think I stay on the outside as a marketing guy for Halalstocks. I stay on the outside so that I can stay in touch with the customer, right? And so I think if you have like a company where everybody becomes an expert, then it's like we don't really understand what people's questions are going to be like about our product, right? But one of those things are, yes, the risk is higher than real estate, for example. But Rehan was explaining, was it the Sharpe curve?
Yeah, the Sharpe ratio.
Sharpe ratio. So he was explaining the Sharpe ratio in Invest Like a Pro, an event that we did in London on Sunday. And he was saying, the ultimate kind of mix between risk and return and how stocks do really, really well on that curve, right? And so, yes, there is a bit of risk, but it's also a much better return than real estate. It's much better return than a lot of these investment halal investment bank accounts, like savings bank accounts that you put it into. And so for me, as the other aspect, we're talking about, I know the question's about risk, but it's like risk versus return, right? So for me, if I have a return coming as a person who knows nothing about finance, then I think it's worth the risk, right?
But how do you upskill the person so that they know before they deposit their cash and they go into this investment? How are you able to ensure that that person knows realistically, look, I really hope that your money you're putting into the stock market is not money that you're going to need if you crash your car or if your boiler breaks down or if, you suddenly want to go on a last minute holiday. Like, is there any way to help educate the person so that they know before they take on that investment that actually, please do not put any cash in here that you want to touch in the next 5 years?
But that's not the role of stocks, in my opinion.
It's absolutely, but
that's the job of Nisba.
I also don't necessarily think that there is an issue. It doesn't have to hold in for 5 years. The reason that we say hold in 5 years, and correct me if I'm wrong here, and Rehan's going to jump in from time to time and kind of like qualify some of my statements. Oh, by the way, I always have to say past performance is not indicative of future return.
Yeah.
But the thing about it is that you can pull it out. You can pull it out at any time you want. You can put it in, and 6 months later you pull it out. But the thing that really kind of excited me about stocks is the idea of compound profit. So before, I never considered that. I've always ever heard of compound interest, which is a negative thing. Somebody borrows. A lot of us early on got on home loans and things like that, or our families were on home loans, and we saw the ugly side of that. Is, buy a house for, these numbers are going to sound crazy because I'm talking about Sydney numbers, but you buy a house for like 500,000 and you're paying back like $1.2 million.
Yeah, it's crazy.
And it's insane, right? But compound profit is the absolute opposite, working to your favor. So you put in, say for example, $1,000 and you're making 20%, right? And so at the end of the first year, you're at 1,200. And then you're making 20% in the next year on that 1,200, not on the $1,000. And in the third year, you make 20% on that again. And so that compound profit, Rehan asked me to throw it into Chat GPT so I can see a forecast. He goes, put in this much, put in this return that we've had annualized at Halal Stocks and do it over 4 years. And I was like,
kicking yourself.
I was like, what? The money doubled in 4 years. And I'm like, wait, that doesn't make any sense. Because you don't think of it that way. If I'm making, say, whatever, 15, 16% on my investment, you're not thinking it's going to double, meaning increase by 100% in 4 years. But it does because it's compounding. It's not adding to the initial amount. And so that's the exciting thing about it. I think we tell people, okay, you're going to hold 5 years because we want them to see that compound profit. But like we said, broker account, you can just go, okay, with a click of a button in the app, just go sell and you have your money in a few days.
Okay, MK, tell me this. When you put your money into Halal Stocks, I guess you are using the platform. If your money was down 20% after the first year, would you be annoyed?
Okay, so I don't, and correct me if I'm wrong, but
No, don't lead on it. So you're not allowed to look.
right. If you're looking at it day to day, it's nerve-wracking.
Yeah.
And that's when I realized, we need to set the expectations with our customers. This is not day trading. You're buying something and you're holding it. And so don't even look at the returns before a year. Just 12-month hold, sell on the 13th.
They will. They're going to look.
They will.
They're going to do exactly what you do.
They will. And they love, I love going into my app and seeing the green because, it goes above, it goes green, it goes down, it goes red. But I think you're right. I think you have to kind of educate the customer just a little bit on that. Stocks go up and down.
Expect 50% of your money to disappear at some time in that journey and come back. So, like,
whoa,
yeah.
whoa,
Let
that's
You didn't tell us that. Please.
So, if you have to be ready for that mentally.
Yeah.
And that's the ticket to the dance, so to speak, right? No risk, no reward. And so we have a principle in Sharia, in Islamic finance, called al-ghunum bil-ghurm, which means that the profit is due to the risk taking, right? So it's a maxim in Islamic finance. And so the reward, right, that you get, which is, like we said, if you're compounding at 16% per annum, that means you're doubling your money every 4 to 5 years. that is because you had the courage to buy an asset, right? To take the risk of the asset, which is when we are investing in the stock market, we are becoming shareholders. We are becoming people who have the right to vote on the directors. We are people who have the right to vote on executive compensation. We are people who have the right to take dividends, right? Like whether it's Apple or think of any great company in the world that pays dividends. When they make money and they share it with shareholders, right? That is your right to take that money, right? And so it is something that's very powerful that you're walking into. And I think then with, as they say, with great power comes great responsibility. But with great returns do come some risk. And that risk requires, you have to have some courage when you're investing. Every entrepreneur, right, or every business owner, even every Uber driver, when they go out, they have the courage to say, I don't know what today holds, right? And stay optimistic about the outcome and then put the work in. And the stock market's no different to any entrepreneur going out there and taking a risk. You should be taking calculated risks, and therefore the stock market, if you do it right, will give you the reward commensurate to the risk, or actually better reward than the risk that you're taking. But you have to be in it. That's really like what separates the men from the boys, right? Or the women from the girls, is the ability to look at risk in a really healthy way, and being able to say, I'm going to take the risk because, I deserve a better future, or my children deserve a better future, and therefore we will. Because from a Sharia perspective, there's very, very few instances where you could generate any return without taking risk, because that's really one of the definitions of riba.
Do you know what this is going to become? This is going to be a huge advert for investing into crypto. Without great risk, you can't make great money. They go, look, see, they told us.
They told us we're
crypto.
all in on Doge.
Yeah.
So that's not what I'm saying. This is not financial advice, but what I'm trying to say is, you earn the right to reward by accepting risk, right? And that's what it is. Otherwise, what is riba? What is an interest-bearing contract? Contractually, there's no risk. I give you £100 and you pay me back 120. Thank you, sir. Great business deal. That, right, in Sharia is prohibited. You contractually took no risk whatsoever, and therefore you don't deserve the return from that transaction. And so I think we need to kind of switch our mindset as investors to be people who are people of courage, I think.
It's a nice way to put it.
Yeah.
Yeah, it's very nice.
But just to qualify, taking risk where you're supposed to take risk, where you've determined it's appropriate for you to take risk. There are other asset classes, Islamic savings accounts,
Sure.
which maybe some people have issues with, maybe some people don't. Sukuk, as you mentioned earlier, property, commodities like gold and silver. So nobody should be looking at this as like the amazing opportunity where I should put all my money without giving it any thought.
Mm-hmm.
Investing is a whole process where you first understand, what am I investing for? What kind of assets can I invest into that can give me the rewards that I need, or can give me the returns that I need, and what are the risks involved with that? I think MK, you were a bit shocked when Rehan said, you can expect to lose 50% of your money at some point. But if we look at the financial crisis in 2008, that's exactly what happened.
Yeah.
When we look at things like COVID, we had significant drops. Again, with Trump's tariffs, we had huge drops in very short spaces of time. And they are risks, and correct me if I'm wrong, they are risks that Halal Stocks does not remove. They still exist out there.
Of course. Yeah, because the asset class during especially extreme times like that, so this is something good to know, the asset class of the stock market, and it doesn't matter like which company that you're in, there are certain moments in that journey where they all move as one asset. And if you've been in crypto, you know this anyway, where when Bitcoin crashes, everything crashes, it's all one asset class, right? And so if the stock market crashes, it's an entire industry that is basically, like I said, asset allocation versus individual stocks. That's a whole bunch of hedge funds and capital allocators deciding right now there's some uncertainty and we're going to move to safety. So they just withdraw from the stock market and they park it in, short-term treasuries or cash. And so when they do that, the entire asset class moves together. And so if you're in it, you're gonna experience a roller coaster.
Yeah.
Right. And but fortune favors the bold. That is actually one of the best times to invest. Right.
Okay,
And
but playing devil's advocate here.
yes.
If you hold through that,
Mm.
it recovers to beyond the level that it was at before you started. And so the stock market is still stronger after the GFC than it was before the GFC, after COVID than it was before COVID, after Trump than before Trump. And so it recovers. And this is one of the things that, before I got into stocks and understanding what stocks are, when I hear somebody losing money from the stock market, you don't actually lose money when your share goes down. You only lose money if you sell the share while the share is down. If you just simply hold and the market recovers, you haven't lost anything.
But that's the whole point when it comes to financial advice and financial guidance. Some people started investing in 2003 and they need their money in 2008. 2008 comes around, the financial crisis hits. Now, I don't know exactly, but probably if you started investing in 2003 and you were selling in 2008, you would have made enough money that even after the financial crisis, you'd still be a little bit up. But realistically, what someone should probably be doing, again, not financial advice, is they should be de-risking closer to the point where they need the money, so that if there is a crash in the risky asset class like equities, they are a bit more shielded. But let's consider someone like myself. I have a significant portion of my asset allocation into equities. And what do? I go for Shariah-compliant funds. Okay? The first thing I'm thinking in my head now is I need to sort out the whole BDS thing, because I got shares like Microsoft, Tesla, who knows? Okay? That's one thing for certain that needs to be sorted out. And that's one thing that Halal Stocks can sort out for me. But as someone who uses funds, and as most people I think in the Islamic community, Muslim community who invest just use funds, what are the main reasons I should consider switching out my equity allocation to Halal Stocks?
Away from funds.
Away from funds.
SubhanAllah. Well, one of them is kind of realigning to the values that the Ummah holds true. So, if you want to sleep at night, that might be a good reason to switch over and not be exposed to Coca-Cola and Starbucks and, Google and, Palantir and all of these companies that are, really facilitating the genocide. But the other reason would be that we can give you better risk-adjusted returns. Most funds are broadly exposed to basically the entire asset class. Like if you're looking at the HSBC World Islamic Index, or if you're looking at the ETFs that like Wahed HLAL or SPUS in the States, Sharia portfolios funds, they're just broadly giving you exposure to the asset class. And so one of the reasons why we do what we do is that we can give, for the same risk that people take when they're taking an equity exposure, whether it's through a fund or not, we want to give them better returns for the same amount of risk, at the very least, right? So what we call risk-adjusted return. And so I think that those are two reasons. One is just better alignment to our values, and two, what our model portfolios are designed to do is to give you better risk-adjusted return while being exposed to the same asset class.
But just to break this down in a really simple form, because I imagine a lot of people who are watching won't even know what a fund is.
All right.
So a fund, in simple terms, is just a collection of stocks. So let's say, for example, you could go out and put your money into Apple. You could say put £100 in and buy a piece of Apple. And if you wanted to have a piece of 100 companies, you could go out and individually buy them. But by buying a fund, you effectively own one portion of 100 different companies in one transaction. So it's quite nice. It facilitates the transaction in that way.
Yeah.
So when you're saying you have better risk-adjusted returns, I'm a little bit confused, because in these funds, some of them have like 300 stocks. Your portfolio has what, 7 or 8?
20, on average around 18 to 24.
18 to 24.
Yeah.
But that 18 to 24, you're saying is less risky potentially than 300. So when I invest into 20, you're saying there's a greater chance of the 300 going bankrupt as opposed to the 20 that you've picked.
No, that's not what I said. So what I'm saying is when you look at the historical volatility of the broad stock market, and typically most funds are market cap weighted, meaning you're kind of deceiving people there by saying 300 because they're not equal weighted 300.
No, of course.
They are, 30% of that portfolio is in 10 names, right? And so you kind of have to be a little bit more, nuanced in understanding that there is concentration risk within those portfolios. We equal weight across those 20 names. So that's one thing that we do. So we don't, you'll find some portfolios where like more than 10%, 15% is in one company, right? And so that's not what we do. But the other thing is we also throw in gold in the mix as a diversifier and so on. But if you look at the historical price graph, which is because we backtest all of our portfolios over 20 years, when I say risk-adjusted return, what we're looking at is how much is the maximum drawdown of the S&P 500, which is 500 companies. Or if you look at the Shariah-compliant equivalent of that would be about 250 companies, right? What is the maximum drawdown of that versus the maximum drawdown of our portfolio, right? And that's really what we're saying. Okay, risk adjusted, historically speaking, it has actually provided you better downside protection than the S&P 500 and given you better return at the same time, which means you have better risk adjusted return.
So you have these 20 special companies.
They change over time, but
How often are you changing them?
so every month there's an incremental rebalance to the portfolio. So every month we look at the market and we look at what are the best deals in the market at this point in time. And so you'll see kind of one or two companies come in to the portfolio, and some will transition out of the portfolio on a monthly basis. So there is a 7% rebalance that happens.
Okay, so this makes me think of two things.
Mm.
I'm an investor. I like to put all my money in at once.
Mm-hmm.
That doesn't sound like it's going to work with Halal Stocks. It makes me think that if you keep adjusting, maybe I can. Maybe I would do put all the money in at once. I just sell some stuff and buy some other stuff as you guys rebalance the portfolio.
Correct. So first of all, I would typically not recommend people put all their money at once into the stock market. You're exposing yourself to a different type of risk, which is market timing risk. Now, most people aren't good market timers, meaning they're not going to actually start deploying all of their money into the stock market while it's going down. It's just, as human beings, we're social creatures, and that's when the news is bad and all the rest of it. That's when people are taking money out. But if you're one of those special people, be my guest, putting all your money in when you know the right time to do so. But most people will start looking at the stock market, especially retail investors, when it's on a high and it's getting higher. And so for you to say, I just want to drop all my money now and into the stock market, I would caution against that. Our portfolios are built for dollar cost averaging or pound cost averaging. They're designed in that way so that you mitigate the market timing risk that you would otherwise expose yourself to if you just dropped all your money in. If you were to do that, especially like through our trading 212 Pi, right, over time it will diversify and it will balance out. But you expose yourself to catching that at a reasonably poor time, which is the market's up, and it goes down from there. So just know the risk of dropping all of your money into the stock market at one go. We typically, the way that we design our system of investing actually guides investors through dollar cost averaging over a year, so that you average in, you get a good price, and you have the best chance of making good money out of it.
And just in a simple way, I'm thinking now, Rehan's going to give away his secrets, but how do you choose the 20 companies?
Sure. So there's different ways to cut the market, but the overall philosophy of our investing is really finding great companies at bargain prices. That's what we're doing. We're buying good companies cheap. That's the philosophy. And so every month we look at the market. We find which companies have the best track record, who have earnings growth, their sales are growing, their balance sheet's bulletproof. They're doing well, and they have a great track record. And then we see which of those at that point in time are most likely to be mispriced, meaning the market is distracted with something else. like AI or blockchain or whatever the latest buzzword is, silicon, whatever it is, uranium. So whenever the market's distracted, right, active manager will reallocate capital chasing the next, whatever the next thing is. And when they take capital away from these companies, we're there to grab those deals. And then eventually the market wakes up from its frenzy and reallocates capital back to companies that are doing well. And that's in that swing is where we make money, right? Typically over a 4-quarter period is when that kind of mean reversion event happens. So that's what we're doing. We're looking at the market. We're trying to basically get the best deals at any given time. And we compare every single stock, right, that's in the universe against its peers, because investing is the art of relative selection. You only have this many things to choose from. What at this point in time versus every other deal in the market, what's the best? And so our algorithms do that work. And then there's a number of ways to determine whether a company is doing well. And there's a number of ways to determine whether a company is mispriced, meaning it's undervalued at this point in time. And so we use multiple methodologies to cut the universe into the 6 segments plus gold, which is always in there. So did that make any sense whatsoever?
Made sense to me.
Okay.
I wonder how much it does to the... But I think it does make sense. Have you ever heard that phrase, the market can stay irrational longer than you can stay liquid?
Yes, indeed.
Yeah.
It's true, right? Which is why we say, like, keep that longer time horizon, like at least that 5 years when you're approaching the market, because, the market can stay distracted long enough for you to be like, why am I holding this asset class too long?
Yeah.
And so that's built into our system of investing, because we in a way have a like, there's an opportunity cost to holding an investment and waiting for it to appreciate. And so for us, the optimal sweet spot for that waiting period it's just after 4 quarters. It's about 13 months. And so that's why we'll take, that's why there's a dynamic rebalance happening every month. We're taking things out that we've waited long enough, because the opportunity cost of holding that, and then switching that into what we know are the best deals right now that we'll wait another 13 months for example. So there's always that. It's the art of execution. You should always be taking profits when you're making them, and you should always be also rebalancing towards what the best deals are in the market at this point in time. And so we're doing both of those same things at the same time.
But from a user level, they don't need to do anything.
Yeah.
They typically don't know that's what's happening, but that's exactly what's happening behind the scenes. Yeah.
It's a tricky... Active management is such a tricky one, because having the right idea isn't enough. You also have to... what you're waiting on is for the market to realize you have the right idea before or when it comes to your time of selling. There's quite the example at the company I used to work at where everyone was quite into hydrogen stocks, and there was this one company which was dead for years and years, and then 1 year it must have gone up 700% in a single year. And it's just the time you waited sitting on that stock doing nothing for it to suddenly go through the roof. You probably could have made like a good few 100% from investing into the S&P or something else, but it's just, do you have the patience, even after 3 years of that stock doing nothing, you see the market going up and up, to continue to hold, or did you sell just before it went through the roof? And even when it does start going through the roof, you realize, oh, I'm up 100%, then you sell.
Yeah.
Then it continues to go up another 300-400%. So it's a tricky one, active management, but
Agree.
it's an art that you guys have perfected, or you guys improving as well?
Yeah, so we are improving. I think we've optimized it to where we think the market typically performs, and so but it is improving over time in the sense that we have multiple strategies in the library, and if we feel that one of our strategies is now underperforming, then we can swap it out, right? And so it's not just that we have kind of all of our eggs in these baskets that we have in our portfolio, but we do have the option to optimize over time. It's something that is seldom required if you have great strategies, because great strategies are ones that exploit something in the market that in a way is by design, right? And so when you have strategies that work for 20 years, right? Sometimes you just have to give them the time to keep working. But there's also a maxim in the investment game that the reason why some strategies work so well is that sometimes they don't work. Sometimes they don't work. So that you'll have years where certain valuation methodologies won't give you the returns that you want. That's why we diversify across multiple of them. But it's an important principle to understand, because anything that works all the time, there's enough eyes on the market that that'll be snapped up, and that edge will be eaten away by billions, or if not trillions dollars of capital. So the idea is for you to find strategies that work most of the time, but they and be able to diversify for those parts of that journey when they don't work, because that's actually the key to their durability. Otherwise, anything that works all the time, the edge goes and it'll work never again. So those are things that, the markets are interesting because it's a social science. And so everyone is thinking about what the other person's thinking about and trying to get ahead of it. And that person is thinking about the next person and trying to get ahead of it. And there's a loop, it comes back to you. And so you're always trying to do what's called second order, third order, fourth order, fifth order thinking, which is, okay, but what is he thinking? And is the market pricing in what I'm thinking? And is it now pricing in
Inception.
exactly what it is. And so that's the game that's being played between fund managers. I think one of the ways that you can find an edge in the markets is that you should have a time horizon that's longer than a hedge fund manager is comfortable with. And therefore, because hedge funds are measuring performance daily, weekly, quarterly at the longest, and they have to report back to their clients on those time frames. If you, as a retail investor, have more patience than that hedge fund manager who's gonna, day in, day out, bust their gut, try and get best returns, then in a way, you have strategies that they cannot take advantage of, because their investors are impatient, right? They're watching their money every day. It's like, how much am I paying you? Okay. So you have to optimize for the short term to deliver returns as a hedge fund for these clients. Whereas us as retail, no one's going to fire us if we're patient.
I don't know, our wives might. If we
Well,
spend all our money.
but that's the other thing. Just don't tell them. Huh?
Yeah.
It reminds me of that movie with Michael Burry in it. I forgot what the movie is called, where
The Big Short?
the Big Short, and the investors are hounding him for the money back, and then he writes how much the return is every day on the board.
The minus.
And then I think one of the last clips of the movie is like plus 2 million %, something like ridiculous like that.
It was huge.
But he had the patience to wait out the housing crisis.
He did have the patience, but what he did was he locked his investors out of the fund.
Yeah.
So he had the power to basically cancel redemptions. And he said no one's getting out.
Yeah.
And so he could do that. I mean, he got a lot of flack for it. But that's actually a great lesson for the retail investor. Pretend like it's not there, especially when there's volatility.
Yeah.
Play dead. There was I think Fidelity did a survey of all of their client accounts, and which portfolios, which clients performed the best, right? Because there's a difference between client performance and fund performance. Clients come in and out, and that's their performance. The fund has been going at it since the beginning. So they did this survey on client performance, and they found two types of clients that had the best returns. The first was those clients which they'd lost contact with. Couldn't actually contact the client. And so the client had forgotten about the investment. And the second type of client was one that was dead.
Yeah.
Estates. They had the best performance out of all their clients.
Because they held?
Because they held.
Yeah, just wait.
Yeah, so the asset class will reward you for patience.
You just need to die first.
Best returns are after you die. Yeah.
It's funny because even though it's a lesson I've learned so many times to buy when the market dips, when you're actually in the dip, it always feels different. The dip of COVID, you think, no, the world's actually changing now. Now it makes sense to sell, and it doesn't make sense to buy because the world's changing. Or when Trump comes in with his tariffs, you think, of course China's not going to survive with those tariffs. I should definitely not be buying. I should be selling. And then you realize a few months later, okay, the market's up to new highs again, and it all kind of sorts itself out.
And we mentioned that earlier, right? Like this whole concept of the stock market has always recovered. And I think this all comes back to, again, with Halal Stocks, is that you're not sitting there day trading or kind of looking at it and stressing out and all that other stuff. You're just kind of like, okay, there's somebody there who is doing that on my behalf.
Yeah.
They're stressing, they're, risk mitigating. There are all these fancy things that you would ideally want to do and learn. We did Invest Like a Pro event, the Brady Center in London, and Rehan went through, okay, if you want to be a pro investor in the stock market, these are the things that you have to do. And then not just like as a pro, but as a pro who's choosing halal and ESG and making sure that it's ethical and making sure that you're avoiding, the boycott list and all this other stuff. And it was so strange. It was so complicated, and it was so nuanced and so involved that the people were there were like, look, I'll pay you right now to stop so that I can become a Halal Stocks customer, because I can see that you're doing so much, and the value proposition for Halal Stocks then becomes super obvious, is that somebody who has done this for years, who has figured out the stock market, who has, in addition to that, a layer of halal, ethical, and conscious investing, is doing enough that it's a full-time job. And then you realize as you're watching that in the event is that I'm never going to do that in the stock market. And if somebody can manage to do all of that and get returns, which, one of the things that Rehan was mentioning is how the percentage of people that beat the S&P 500, for example, small percentage here and in different countries and so on and so forth. And then you look at the halal stocks over the last 5 years versus the S&P 500, and you're like, actually, we beat it very soundly. And so it's like, okay, well, then, all I have to do is like pay this small subscription fee, and I've got like a pro of pros kind of thing doing that for me. Well, there it is.
Well, how small is the percentage of the people that beat the S&P 500? Do you
Depending
remember
on the country, right?
Yeah, so it depends on the time period. So, so for the United States, I guess over a 1 year period. So, everyone should look this up. There's a SPIVA report that S&P publishes, because it's a bit of a flex for them. They publish how many fund managers don't beat their index, right? So over a 1 year period, it's a 50% kind of strike rate on. That was the 2024 report, and then as the periods increase over a 3 year period, it'll go up to in the 70s, and then over a 5 year period, this is failure rate, right?
So so to clarify,
Yeah,
50% of people are able to do better returns than the S&P 500.
in a
As time goes on,
1 year
it
period.
becomes that 70% cannot, then 80% cannot. And so essentially it's the inverse of that. 20% of people at 3 years are able to do better than the S&P 500.
So you guys, based on your historical actual performance, have done 3 years.
5 years.
You've done 5 years of actual outperformance.
of
So
the S&P
over the
500.
5 year period, so it gets harder the longer it is, right? And it doesn't mean that you beat the index every year.
Yes,
That's not
yes,
what we're
but
saying.
yeah.
What we're saying is, what was your compound annual growth rate over that period of time? And the longer it is, the harder it is to beat the index. So in the US market, for example, that might be 88% of fund managers don't outperform the S&P 500 over a 5 year period, meaning the inverse of that is 12% do, right? And so, we strive to be in that top 10%, right, of return generating strategies. And we want to make sure that the Muslim Ummah has access to that without compromising their values.
So the Halal Stocks mission for people who are just joining us is give Muslims an unfair advantage in the stock market.
Now, there are other actively managed funds in the Shariah-compliant space in the UK. Two that I can think of. There's one done by Schroders, and there's one done by Saturna. I think even Oasis have a fund, but it's not very well known. You guys are not a fund.
Correct.
Why are you guys not a fund?
It's a great question. So we deliberately not a fund because we wanted to have global appeal from the beginning, So we had people from Turkey and Uzbekistan and all sorts of places subscribe to our service and generate returns. If you're a fund, most people on the planet can't access you. It's very jurisdiction specific, and and it's typically, unless you're a wholesale investor or you're a sophisticated investor where you get access to like all the funds in the world, most retail customers can't access many funds from where they are. Like if I'm in Australia, I can't access half of these funds because I'm a retail investor.
Mm-hmm.
And so for me, it was always like, I don't know where these people are who need this help, but I just want to make sure that I'm not hiding, or I'm not putting that behind some kind of regulatory barrier for them to not being able to access. So I think setting up a fund is definitely, it's part of our roadmap. Inshallah, we'll get there. But my priority was how can we help the most number of people and be as accessible as possible to everyone. So it's a simple subscription model. If you can bring your own broker and generate the same kind of returns that we do, and so we're really for kind of the grassroots. That's where my heart is how do we help the common man, right, get access to great returns.
And when you say you can bring your broker, are there specific brokers that someone has to use to work with Halal Stocks?
From an automation perspective, so if you want like the full turnkey experience, like you want to do as little work as possible, then Trading 212 for UK, Europe, UAE, and even Australia. Trading 212 is the platform through which we kind of surface our portfolio. But then there's Alpaca Markets in the States. And then there's also, when our app will be out soon in the App Store, we'll have Webull and Wealth Simple as well off the rank. So those are some of the brokers that we can facilitate a more automated experience. But if you're with IG, or you're with Hargreaves Lansdowne, whatever, you can still get access to our portfolios, but you're the one doing the buying and selling. You're the one making those decisions.
And what will your app do that's different to using a brokerage?
So what our app does is one, allow automation or software driven portfolios through APIs. So I'm getting a bit technical, but they basically, what the app does is plugs into like Alpaca Markets, or plugs into Webull, or
Okay.
it plugs into
Translation. The app will allow you to follow the strategy of Halal Stocks with clicking one button per month, or no buttons per month.
Yes, so it'll allow you to do so depending on what broker you bring. So that's one. And then obviously the other aspects of it are really like from a Sharia perspective. So the app's going to calculate the zakat.
Very nice.
It's going to, tell you what dividend purification you should do. And then we'll have plugins to different kind of charities that will allow them to, purify their wealth in a really easy way. So that's, and then we'll publish some of our more advanced portfolios through the app as well, right? So, we've got things coming for Bitcoin, for gold, for people who want to be a little bit more active. Then there'll be other tools that we'll make available to you that just help you level up kind of your investment game. It won't just be this. We have this flagship portfolio, but there's more to come, inshallah.
I really want to ask about how you do the BDS stuff, because that's one thing that people ask us. I'm going to bring this story again. Sorry, Adil must be sick of it. I've said it so many times. But a family member asked me if they can shop at Costco. And they go, I'll go do your research, because they know whenever, MK has probably already determined that whenever someone says something to me, I have to check on Google. I don't believe anyone. So I go on to Costco. Oh, what do they do? Where are their offices based? Nothing in ethically bad countries. But they do sell some products from countries which are not aligned with Muslim values, let's say. They basically, they don't have stores in Israel, but they sell some Israeli products. So I said to them, well, you have to make the decision. Is that good enough for them to be boycotted or not? So I think the whole area of what should be boycott versus what shouldn't can be quite subjective. So how do you guys do it?
Yeah, it's a great question. So we do use the official databases of the BDS movement. So there's a few online. If you go to the BDS Movement's website, they'll direct you to a few databases. So we use those standard databases. Those are typically companies that have been involved with human rights violations or, including, facilitating the apartheid state, breaches of international law, and so on. So there's that official list. And then there's a whole lot more. So there's a whole bunch of companies that, when we're looking at the US, the APAC donor list, for example, that's another database that we use. So these are companies whose key staff are, heavy donators to APAC, for example. APAC is basically the Zionist lobby within the United States. Then there's an interesting database that's published by a Yale professor for companies that are, openly announce their support for Israel and make open political statements with regards to what's happening in Palestine and so on. So that's another database that we use in our input to screen companies. And so it's multi-pronged. And obviously, these are companies typically are apolitical, but in recent times, especially since October 7th, 2023, they've gone full mask off a whole bunch of companies, proudly so, because it's good for business for them, actually. And so that's made our job a lot easier in the sense that these are companies that are outing themselves with regards to a political inclination. And so that's the additional effort that we go through to make sure that when we're screening for Sharia compliance, we're also screening towards what we know, is very, very important to the Ummah right now. You've seen all the protests. You do have people who are boycotting. But the divestment pillar, I think for some reason, is kind of the last pillar that we haven't really cracked. And so that's something that, because we're stock pickers, in a way we have the luxury of being really picky, right? With the investments that we make. Whereas if you're in an index fund or if you're a passive investor, you're at the mercy of the index, and once an index rules are written, they're not changed typically. So this is the problem with the current ETFs that we see with regards to Shariah-compliant ETFs that are in most portfolios. Even most fund managers are in a way mimicking an index, and so they're watching things like tracking error. They all have incentives to maintain the status quo. We don't. And so in a way, I guess we very quickly, as soon as those events in 2023 happened and these companies started making political statements, and now they're very openly supporting, the IDF and so on, it was very easy for us to be able to say, sorry, you're out, you're out, you're out. And we historically have not needed big tech to make returns. So that's the other thing about our strategies. They work more so in the mid-cap, what we call mid-cap, $10 to $100 billion companies. And those companies are usually just bona fide companies trying to sell great products and services, as opposed to playing a political game with governments. Whereas when you're in the top end of the town with Microsofts and the Googles and the Amazons and so on, like, it's actually only, I would say that the entire BDS list from a boycott perspective, from a divestment perspective, it's only really 150, 200 max companies. There's 6,000 companies listed in the United States. So the vast majority of companies are actually not violators of BDS rules.
So they're fine.
They're fine. But the vast majority of market cap is.
Yeah.
And so most funds, because they're market cap weighted, are overexposed to these, these companies that are on the wrong side of genocide.
Yeah, I guess it's nice when you're small and you're, nimble. You can make these decisions. If you're in the fund, you get stuck, and there's no real way around it.
It's very hard for those fund managers to now generate returns without having big tech in there.
But even like promoting it, because we had the discussion of potentially going down the fund route right at the beginning. And even if you were to like, go down the route of saying, okay, we're going to create a fund and we'll do the Sharia compliance, we'll do the ESG, and we'll also do the BDS. When you go to market it, how do you then go to label it, and what would you call it? The ethical fund maybe, but then you have problems of, getting it listed on a stock exchange. Then you have the problems of getting it listed on the different platforms and the brokerages. So you get hit with a whole barrage of issues. But I'm wondering from your point of view, obviously, whilst it's hugely beneficial that you can target the whole globe, any compliance issues that you have to worry about, like market to market?
It is, those are there. And, the restrictions around marketing financial products to retail customers, that's what regulators there for, right?
Yeah.
To protect the retail customer base. And so, in Australia, we're authorized, we're licensed to deal with retail, to give financial advice, and wholesale clients. So that's like in Australia, we're fine. For other markets, right, by publishing through a licensed financial institution like, say, Trading 212, that's kind of a route to market for us. But we're not going to, start advertising to retail clients in those markets. It's not really what we're trying to do. We'll, just like we did in Australia, we'll partner with FCA regulated entities as a first stop to if we want to market into any region, that's our go-to-market strategy. And then if you get sufficient clientele, then that's a data point that you take in and say, okay, it's worth investing in getting our own license, right? Which is, I think, the more pragmatic and prudent way to enter any market is that first through partnership, and then through directly working with getting your own license in that jurisdiction, unless you've got a lot of capital to burn and you just want to launch a $20 million or £100 million fund. If you can justify the overhead of the fund, because the compliance overhead, let's say, is £200,000 a year or £250,000 a year, if you can justify that and you have enough AUM to do it, you can do it from day one, right? But if you want to be data driven, I think that would be also kind of my advice to you guys is, obviously you're in the UK, it makes sense for you guys to be, seeking a fund here. For us, we did it in Australia, right? So with getting licensing.
Is it easier in Australia?
I don't think so. Our regulator is pretty tough.
Really? We should move down under. No.
ASIC's pretty tough. And it is modeled after kind of the FCA. So we have similar kind of regulatory regime in Australia. It's actually known as one of the tougher regulators from that perspective. But they're not like the United States. The United States is, they shoot first, ask questions later. Yeah. You'll find out that you're on the wrong side of regulator after you get the fine in the court order. You know what I mean? But the UK is a bit nicer. Like, they'll let you know before.
Over a cup of tea.
Yeah. They'll be like, we won't fine you just yet, but please fix this up,
You guys called yourselves Halal Stocks, right? Some people would say it's not a very imaginative name, but we're not here to judge. But thinking about it, there's nothing wrong with Halal Stocks for non-Muslims.
We have customers. So the interesting thing about Australia is that because it was the birthplace of our journey, we've had customers that have come on that have not been part of our target audience. We didn't reach out to them. They found us and joined the journey. And one of them is a non-Muslim, lifelong stock market investor who kind of noticed us and then went, oh, you know what? I'll have a look at their picks. And then it's like, oh, okay, actually, that was a good pick. Okay, I'm just going to jump into the next round. And then eventually went, oh, you know what? Why am I making all this effort? You guys are already doing such a fantastic job and you're doing better than I did. And I've been in the market, twice or three times as long as you guys have been. And so he just kind of gave up on the game and joined our game at better returns.
Did he join the other game? Did he convert?
Still working on that, right? Yeah. I think it's a great way of dawah. If you can, at the end of the day, money talks, as they say, right? And if you can generate people great returns, it doesn't matter if it's like halal or not. Like people love halal food, right? It doesn't stop them. It's actually a great icebreaker. So from that perspective, I think Halal Stocks, one of the reasons why I picked the name Halal Stocks was because when I first was thinking about the stock market, I actually thought it wasn't halal. Just I just didn't. I thought it's a haram thing, you know. And so, for me to kind of invoke that kind of, it's really simple, but it's also in your face, right? It's like halal stock, and some people do a double take, and they'll be like, "Oh, okay." In a way, it's informative, and that's what we're trying to do, is just like make people think twice about the stock market, because it's in really what I feel is the stock market, which is a place where you raise capital for business, right? For tijara, which is something that the Prophet ﷺ encouraged us to do, right? From that perspective, it's actually one of the most wholesome asset classes for a Muslim to be invested in, which is the business world. We're actually encouraged to become entrepreneurs. We're encouraged to do tijara.
And that's a beautiful thing about jumping on with somebody who knows what they're doing, because it allows you access into that without the risk. You know, like, okay, let's say, for example, if you could quantify a risk number on a particular pick that you did, or let's say, for example, there was a risk profile to Halal Stocks as a company, and let's say, for example, that had a number, right? If I joined the stock market as somebody like MK joining the stock market who doesn't know anything about picking stocks, I'm not involved as part of the stock picking team at Halal Stocks.
Not yet.
But if I was to go, okay, you know what, I'm gonna open up a trading account, and I'm just gonna like, okay, yeah, that looks good. Oh, look at that, that's been performing really well. I'm just gonna jump onto that, whatever it is.
I might better buy that. Yeah.
And then my risk, if I could quantify that, probably be like triple, quadruple the risk of Halal Stocks. And so the idea is that, okay, it's a great market, asset class, great market, and it's going to get great returns. But jumping in with somebody who already knows what they're doing and is ethical is a smarter move than jumping in on your own. And then we hit all of these myths, and like people come to us with all these myths like, okay, stocks is gambling, or I need a lot of money to get into the stock market, or I'm gonna, it's super high risk, or all that other stuff. And it's like, okay, some of these myths have some truth to them, but also a lot of them are debunked by joining Halal Stocks as opposed to going in on your own.
And at that point, you're saying, look, go to Nisba. They'll educate you on everything.
Yeah, absolutely. No, I think education, like joining Halal Stocks, like just having these conversations at the booth at MTF, were like, it's mostly education. The Invest Like a Pro event that we did, like I said, it was like Rehan was running the event as an education event. It wasn't a sales pitch for Halal Stocks. But kind of halfway through, you start to realize, wow, like if this person has that much knowledge on the stock performance, on the investment approach, on the halal compliance, on the ESG, on the BDS, well, that's actually the person that I want picking my stock market strategy, as opposed to trying to figure that out on my own.
It's definitely nice having obviously Muslims running something for Muslims. It makes the whole the buy much easier, hopefully.
Exactly. No, and I love the work that you guys do. So, alhamdulillah, at MTF, I did attend the Nisba booth. I went and spoke to your financial coaches, mashallah. And it's really, really important work that Nisba is doing with regards to, one, leveling up people from an education perspective. Because, like, okay, we sell a product and we think it's useful in the community, but one of the biggest problems that we have in the community is that people don't have the prerequisite knowledge to really appreciate what we've built. I've spent like 9 years working on this thing, but we need to elevate the ummah to the point where they can appreciate the solutions that the ummah entrepreneurs and people are building, the things that you guys are building. And so I think that's a really important mission that you guys are on, and we're definitely here to support that.
Okay.
Can I just check from a practical perspective? You guys have a level of pricing which is, at the moment, it may change in the future. That's why I feel like I don't really want to say it, but at the moment you have a set price. Can you tell us what the price is?
So at the moment, for launch, for our founding members, because we launched over the weekend at Muslim Tech Fest London, it's £249 and no more to pay, right? No more fees from us. We don't charge you anything more. And for as long as we run that portfolio, right, you won't pay any more than that. So that you get access to that through Trading 212 today. And when the app is released, you'll get access to it through the app as well, inshallah.
Okay, so practically speaking, if I'm an investor, a lot of investors are quite young these days, the ones that you might speak to at some of these tech fest and whatever.
The youngest one that we have is my nephew. He's 12.
Oh,
And he's
okay.
asked me to open up Halalstocks account for him. He said he has $400. They're living in Dallas, Texas. And he goes, so he has $400. And he came up to me and said, oh, I heard you're working for Halal Stocks. I said, yeah. He goes, I've been wanting to invest in the stock market.
Yeah.
Like, I was like,
MashaAllah, the
Man.
Americans are another breed though.
Yeah,
Like,
but they have a way higher risk tolerance. They're exposed to risk.
but like, you know,
They love
12-year-olds tell I've been wanting to,
Yeah.
like he's been contemplating it. I'm like, well done, man. Like other people are contemplating Minecraft at your age.
Yeah.
And he was like, can you open up an account for me? And so we're going to do it through his mum. But it's.
But then you told him he can't do it because the entrance cost is 275, or if we convert 280, and he's only got 400.
No, not at all. So the 249 is an offer that we're running right now, so that you don't have to pay the £15 per month or 15 to £20, depends on how it converts from dollars, per month over a longer amount of time. So it makes sense right now to join this founding member, where you pay it off. You pay once, and that offsets kind of like a year and a half or so of subscription fees. But if you don't want to do that, you can join and just pay for the first month, and then continue to pay that month to month as you're going with your investment.
Are you saying that you have two models,
Yes,
two pricing models?
there will
Our
be.
regular is the monthly or annual. That's what we're doing. This founding member offer is definitely
It's limited time.
Limited time only.
So we'll have a monthly model, which is just month to month, and then or annual, and then the lifetime membership is just limited time offer.
And the monthly model is not linked to the amount of money that the person is investing in. It's just a flat
Fee.
thing, which could be
That's
between
right.
10 and 20.
So, and a lot of people do ask me that question. They go, okay, so what's the percentage that you take? And I said, we don't take a percentage. Wait, what do you mean? How do you make money? What if I invest $1 million? I'm like, yeah, invest $1 million. Go for it.
Which works great for the people with $1 million, but then for the person who has £1,000 to invest, that's where it becomes a bit, okay, maybe you should think twice if you're giving up 25% of your initial capital. A lot of people that we speak to don't actually have that much money. But then,
But even if you were to, so let's say for example let's run that scenario through. So I've got £1,000. I'm going to put 250 pounds out of it to get a lifetime membership. £750 left over. I'm going to put it in there, and let's assume I'm never going to add anything to it. Over 4 years, that £750 is going to become £1,500, and there are no more fees that are being deducted from it. So I net positive in any case. But what we have seen amazing results with customers is where they put in whatever they have now, £100, £100, £1,000, whatever it is. But then they're usually going, okay, well, this month I'm going to be able to save another £200 or £500 or £1,000 or whatever it is. And instead of putting that into a savings account, drop that into your brokerage account and let it fund the next month. And as they're adding in, we often internally refer to the snowball effect, because that's what we've seen happen to our customers. So it's not just compound profit, but you're also adding a small amount. And so that snowball that's snowballing on its own with compound profit, you're adding a little bit more momentum into it by adding a little bit every month. And that's realistically for the average Muslim investor, just working a 9-to-5 job, which we're hoping that Halal Stocks will help you get out of that 9-to-5 job, and get some financial freedom, or at least have the option to do something else with your life. Nobody's sitting on top of like thousands and thousands of their currency. They're sitting on a very small amount. They're thinking this is not enough to invest into anything. Well, with Halal Stocks it is. You put it in, and then every month, oh look, I managed to squeeze in 100, squeeze in a few hundred. Let me just add that to fund into my brokerage account and keep that going.
But I think if you don't have a lot of money to invest, right, the ROI question that you're asking, I think is what you're asking, is very, very important. So, if you've got £50 to invest, and that's all you'll ever invest, then paying £249 for the privilege may not be the best deal for you. But at the same time, maybe it's more of an education thing for you, or maybe it's just you're locking in it now because in the future you're gonna, avail of the service in 2 years' time when you have a lot more money. So those are some of the incentives that we're working with. Is like if it's lifetime membership. I mean, you could start in a year from now, but if you lock in the price now, then you've gotten access to something that we're not going to charge you again for.
Okay, so we've covered a lot. I wonder if anyone still made it to the end. Well, I'll be very surprised.
I
but,
actually found it super interesting.
I did personally,
was
but I
my
like
kind-
this stuff.
Loser.
Well, I mean, you would assume a lot of the people watching this.
You'd
stuff
like to think
this
so,
stuff too,
but but alhamdulillah. So yeah, we've covered a lot today. We've looked at kind of what the halal stocks offer, what's the journey, where are you guys going, kind of some of the methodology around what you're doing, and inshallah, may Allah put barakah in your efforts and help more people, and really help those Muslims, grow their wealth, because we've seen far too often that's not the case, and they just leave it in the bank account rotting away. But yeah, please do your research. Obviously, go onto your website, check out, and if they want more information, you have a website.
Yeah, halalstocks.co.
Okay, great. So they go
Not-
there.
.com.
Just
No,
.co.
.co.
Yeah.
Someone is still parking stuff.
If you're out there and you've got that domain, reach out.
No, .co
Yeah.
is
But
quirky.
halalstocks.co, yeah.
It's
And-
quirky, like you remember it.
Yeah, it's really nice, yeah.
So yeah, if you want more information, please check out halalstocks.co. Jazakallah khair, Raihan, MK, so much for your time.
Thank you so much.
Thanks for having us.
And if you enjoyed today, please remember to subscribe and like, and check out all of the rest of our content. Salam.
Salam.